How's it going, everybody? It's Stas here, and in this video I want to break down and share with you all the top couple of stocks and ETFs that I'm personally watching and looking to trade heading into this fourth week of December, the final week here, guys, of the year 2019. And I also want to break down what the markets did in terms of the S&P 500 in the last 5 days of trading and where the markets are in general on a longer term time frame, so we can see and maybe predict kind of what could happen here over these next couple of days. And forewarning, guys, this week that we're going into, it's actually a short week in the markets because on the 24th we have Christmas Eve, so the markets, I believe, close at 1 p.m. Eastern Standard Time on that day, and on the 25th it's Christmas, so the markets are completely closed on Christmas. So that's worth mentioning here, in my opinion, in the beginning of this video, because that's something important for the final week here in December. So before we get into everything, all I ask from you is to simply go down below, hit that like button if you enjoy this video at all throughout the video, and consider subscribing if you want to see further content from me. And if you want 2 free stocks from Webull, I have an affiliate link down below where if you sign up using that link and deposit $100 into the account, you get 2 free stocks valued up to $1,400. So that's linked down below. And let's get into it here, guys, talking about the S&P 500 over these past couple of days. Then we'll pull up a longer time frame chart and see what the analysis is telling us. What are the technicals telling us there? So on the 5-day 5-minute, which again is this last week of trading, we can see we had 1, 2, 3 days of straight up consolidation on the S&P at around 31.90. Well, this day, I believe on Monday, we rallied up that day, we gapped up, and then we consolidated for the rest of the day. And from there, Tuesday, Wednesday, and into Thursday morning before the breakup, we were just consolidating at that 31.90 to around $3,200 level. Then we started to get more trade optimism. We got those what's that? That announcement from, I believe, the Treasury Secretary of a potential trade deal coming in January. That ended up rising, or rather raising, these markets even more, in my opinion, heading into Friday. And we actually had a pretty big gap up here into Friday, which ended up leading us to having a 0.5% green day and hitting another all-time high. So if we pull out here a bit to the 4-hour chart, like I mentioned in my video yesterday, guys, or rather on Friday, this is very overextended, very overbought, in my opinion. The RSI is getting to levels that are just straight up unhealthy at 80, right? Anything close to 70 and above it, that's extremely oversold. So the fact that we're very overextended on top of that EMA as well, and we kind of started to see a bit of a sell-off, I believe, on the daily, if I'm not mistaken, heading into the close. Yup, we can see a bit of a sell-off. So that's indicating that we might be pulling down here, and if we pull back to that 4-hour, we can see maybe a pull down to that EMA at around 3,200, maybe down to about 31.90 before ultimately continuing the uptrend. That would be healthy, in my opinion. But with the markets, with how hot they've been, I wouldn't be surprised on the flip side if we continued rallying up. And we're going to be watching the futures throughout the day, especially Sunday. Today, after you watch this video, guys, go check out the futures. What are they looking like? Are they gapping up? Are they gapping down? And especially into Monday morning, what are they looking like? If we're gapping up, we can maybe expect the rally to continue. If we're pushing down, maybe 4, 5, 6, 7 points in the red, that may be the pull down we want. And then from there, we may see again a hold on the EMA, maybe that 31.90 level. So those are some thoughts on the markets, what's been going on here on a technical basis on the S&P in terms of the S&P. Now let's talk about a bunch of stocks, guys. I have about 8 to 10 here, it seems like, that I want to share with you all. Heading into this new year, these are stocks that I'm watching, at the end of this month. Some of these I already own, some of these I want to buy, and I'm planning on swing trading them, a lot of them, into this new year, turning over this new decade. So HD is one that I'm currently in, and this is one that I want to swing trade. Overall, if we look on the 3-year 1-week chart, we can see a lot of confirmation of the uptrend continuing. We had that big sell-off from 240 after a not too great earnings report, right? You know, people sold off after that earnings report, bringing us all the way down to around $210. And me personally, this is what I love as a swing trader. I love chasing these blue chip stocks, you know, whenever they, fall, maybe not chase them, but whenever they fall in price, I like looking at them and heavily consider, buying in as a swing if the technicals are lining up. And they started to line up a couple of days ago, and that's when I started to buy in at around $217, and I plan on swinging this one up to 223 at least. And if we break that level, there's a lot more upside from there that I'm planning on capitalizing on. So on the 3-year week chart, we can see uptrend is continuing. It's looking good. The 1-year 1-day chart, we can see we held that 180 SMA at a higher low. That's also a very good sign. Now we're rallying up. So I'm interested in seeing if we crack above 223, because that actually is a resistance from a couple of weeks ago, which is why I mentioned that level being where I would like to maybe take a little profits before adding more into this as we break above 225 and try to get back into those 230s. So those are my thoughts there on Home Depot. McDonald's is another one that I'm not in right now, but I'm interested in getting in, especially if we break 198 and into the $200 level. And let me explain why, because if we drag this chart out a bit, we can see this can go either way at this point. This could be setting up for a major dump, and honestly, what would that look like, guys? That would look like a head and shoulder on this yearly chart if we were to see a pull down like that. And a lot of people think that's going to happen. There's bears on McDonald's right now that think it's supposed to be into the 170s, 180s, 160s, and if their beliefs come into reality, we may be getting down to that level, which would be the completion of that right shoulder. So before I even get in, I need to see a definitive pop above this level, and that would be really the beginning of a cup and handle potentially, right? Which this would be the cup if we were to break into 200, 205, and even higher. And obviously that's where we'd profit from around $200, 198. If that breaks into the $200 level, we could ride it from, let's say, $200 maybe to 202, maybe to 205, 206. Then from there, there's a lot more upside, maybe to 210, $212. Another one that I'm watching here is PayPal. I'm actually in this one, and it's really setting up nicely in my opinion now. We held above 108. We closed above it on Friday, which is a strong support level that used to be a major resistance, which makes it a new support since we've broken above that old resistance, right? And my goal, honestly, is to sell at about 112. That's where I'm looking to profit here on PayPal. Mind you, I'm already in from below this resistance break. If you guys remember, I got in at around 104.30, added a little bit more, I believe, here, took some profits at about 108, waited for the break. Now the fact that we're holding here, I might add a bit more as well, and ultimately sell out, like I mentioned, at around 112. And there's even more potential there, guys. If we break 112, I'd probably sell out there, lock in the profits, be safe with it, then add more on the break above 112, and then ride it up to potentially 115, 116, where we can make another on that 3 to 4% potential, or rather profit potential there, which is fantastic. So another one that I'm in is Uber, guys. Bought some, I believe, on Thursday, bought a little bit more on Friday, and this is one that I'm just noticing an overall breakout on the stock, and I believe that the negativity surrounding Uber is kind of behind in terms of the effect on the stock price. This thing took a 50% haircut, guys. You have to realize in the matter of 4 to 5 months, that's pretty insane. The lockup expiration, that's what everybody was looking at, because a lot of the early on investors after, I believe, what was it, November 6th, if I'm remembering correctly, was the lockup date. Anyway, after that period, a lot of these older investors, they could sell out of their shares, so a lot of people were skeptical skeptical getting into Uber before that because they didn't want to get in and then all of a sudden have the stock tank. So we didn't really see the stock tank too much after that lockup from what I'm remembering here. Actually, it fell a little bit down to about this period, or to this point rather, $25. But again, ever since then, it seems like this has been shifting. We've been making higher lows, higher highs. We've broken out of the moving averages, both the 180 and the 50 SMA. We broke the $28, $29 level of resistance, and now we're fiddling with $30, $50, $31, which is the next resistance, where if we break that, I'm looking to add more money on the gap fill up to maybe $33, which does give us an 8% potential. And again, I'm already in under this resistance, and the way I swing trade, and I'm sure a lot of you can relate, is I scale in. So I bought a little bit here, a little bit more here. Now again, I'm looking to buy here to sell out up here and probably make around 6-7%. And honestly, guys, there's more potential even from that break. You know, again, I like being conservative, locking in profits, and then re-entering. That's how I do it in a lot of my trades. And this is where I'd look to re-enter at around $33 here on Uber. The next one that's kind of not similar to Uber, but it's a car company. It's NIO, ticker symbol NIO. And this is one that's on the verge of breakout. It's actually already breaking out, it seems like, after hours on Friday. It broke that resistance at 270. It's at 272 now, so that's a really good sign here for NIO stock, as you guys can see that breakup after market hours. Now what I'm looking for is a potential rally from 270 up to around 290 to about $3 per share. And from where we are now up to that level, we can see, if I zoom in here, oh, that's not working. Let me go to this 30-day chart, maybe this 90-day chart. We can see from 270 up to around $3. That's an 8 to 9% potential for profit here on NIO. So that is where I'm looking to make money on NIO. Obviously, like I've mentioned in these videos, I'm long on the stock regardless. I own it in my long-term account, but I'm still interested in dabbling with it in my swing or day trade account, where again I can make anywhere from about 8 to 10% on this 270 to $3 move. Ticker symbol NIO. So the next stock I want to talk about today is going to be Disney, guys. Ticker symbol DIS. And this is one that ever since they reported their last earnings report, which if you guys remember, they went extremely ballistic after that last earnings report. The stock went from 130 up to 153. We got some initial numbers from Disney Plus. I believe 10 million people signed up in the first day, the launch of Disney Plus. After that phase, we ran up aggressively, and ever since then, it seems like we've been retracing, and the technicals obviously point that out, and we've seen a 4% sell-off from around $153 to around $145-ish where we are right now. And notice what's happening right now, guys. We're holding that level of support at around 145, 146. We're actually seeing a double bottom here. We bottomed there the first time on the 10th of December. We bottomed there again on the 9th of December. Now we may be testing a breakout here if we break above that 50 and that 180 SMA. And one way to watch out for this is to see pre-market, if you want to catch this breakout, what is Disney doing? Is Disney gapping up? Are they moving up aggressively in the morning? You know, are they breaking above the moving averages? These are things that I'm looking for. Then we could potentially make or form a cup pattern there and really just continue the uptrend there. So that's kind of what I'm waiting for in Disney stock, DIS. And another thing worth mentioning here, I should have mentioned this in the beginning of this video, but typically the last week of the year in these markets, which again is this upcoming week we're heading into, it's a lower volume week this last week. There's lower trade activity. You know, a lot of people are maybe not trading much, or they're just closing off positions because it's the end of the year for tax reasons. So that's something to keep an eye on, you know, worth keeping it in your head, because if you're noticing low activity in these markets, low volatility, you know, just low movement in general, that is why, and people will will probably hop back in. The markets, you know, normal activity will resume sometime in January, right? That's kind of how it goes. Over the holidays, you get slow, then it starts to ramp back up. So that's something worth watching here. And again, I should have mentioned that in the beginning of the video, but if you guys are still here, now you know, and I'm sure all of you knew that anyway, or most of you guys knew that anyway to begin with. So ROKU is the next one I want to talk about. This one's in a wedge, like I mentioned in yesterday's video or Friday's video. I don't know why I keep saying yesterday, but this is in a wedge. So at this point, it's setting up, in my opinion, for a break upwards, right? And from where we are now, 137 up to the resistance of this wedge at maybe around 150, 155, that could give us a nice potential of around 8 to 10% on ROKU. Obviously, we'd want to see a break above these moving averages before entering, but let's say we end up doing something like that, dumping down. This could potentially be a short play because that would be a very key technical break to the downside that could bring some selling pressure, and maybe people start selling aggressively there. Who knows? We have to wait and see what ends up happening, but I think it's worth watching here this upcoming week. Another one is Facebook, ticker symbol FB. This one, very, very key technical breakout this past week. It broke above $205, which is very attractive in my opinion, because now its next resistance is going to be around 205, which is this point right here, and that all-time high, I believe it is the all-time high at $216, which gives it a lot of potential from where we are now. Actually, no, it's not the all-time high. All-time high was back in, wow, it was over a year ago. So Facebook actually hasn't hit an all-time high here in a year, over a year. That's pretty interesting. All the other tech stocks, it seems like, have hit all-time highs. Maybe Amazon too. Amazon, going off on a little tangent here, Amazon hasn't hit an all-time high since around that same period that Facebook hit the all-time high. So that's pretty interesting. But nonetheless, we could watch Facebook here from 205, up to around 218. I think that's a viable option. That's a move that could be made over these next couple of weeks. And if these markets continue to do well over these next couple of months, which I personally think they will, especially before this election, the Fed's doing everything in their power. If you guys are looking at the repo markets, take a look at that if you haven't done so already. And I think these markets will stay up. Facebook will do well. Facebook will do well. I think we'll get to 218, 220, maybe even higher, because another side tangent is excuse me, guys, a lot of people still think Facebook is considered, you know, one of the most undervalued tech stocks out there. I think their forward PE right now is like a 20, which compared to some of the other ones that are like 25 to 30, that's pretty good. But don't quote me on that. That's off the top of my head from last time I checked. And yeah, that's pretty much it for Facebook. And to wrap up the video, I'm also watching gold/GC. And honestly, I'm watching this just in case of any market turmoil. Let's say we get, you know, all of a sudden some bad news, these markets end up dropping. Gold could end up being a breakout that does well. And, you know, it obviously has been doing well as tensions were rising over the past couple of months in terms of trade and so forth, right? You know, it was doing very well. Let's say we get some bad news, like I mentioned, that could continue the breakout rally here, maybe back up to $1,500. And one thing that I like trading, or an ETF I like trading, is JNUG, and this goes up whenever gold is going up and whenever GDX is going up in particular, right? So this one is already breaking out above moving averages, which is interesting, right? This has been slowly popping up while the markets have, you know, been going up as well, which is weird because gold actually moves to the, you know, it kind of moves, what's the word? Inversely to the market. Markets go up, gold goes down. That's kind of how it goes. Not always, but a lot of the time, that's how it goes, right? So JNUG, JDST is the inverse to JNUG, which is what I'm watching as well. Let's say gold ends up dumping, which could happen. JDST will go up on that move, so that's worth watching in my opinion. And market ETFs in general, like I mentioned in the beginning of the video, the markets in general are extremely extremely overbought in my opinion, and a short-term pull down would be healthy. So what could we trade on a short-term pull down? Ticker symbol SPXS, which goes up whenever the S&P 500 is going down. And this is a 3x leveraged ETF, so this is leveraged, so you can make, especially if you're day trading, a decent amount of money trading this. Don't think it moves just like the S&P in terms of percentage. It moves 3x. It's 3x leveraged. Another one that's leveraged is SQQQ, which goes up whenever the NASDAQ is selling off. So those are two that I'm watching in terms of market ETFs. TVIX is one that I'm watching for volatility. Same with UVXY. And that's pretty much it, guys. Oh, UGAZ. I can't forget to mention UGAZ. UGAZ at this point seems to have found a temporary bottom here on the on a technical basis, right? At around $7-8. We're breaking above the 50 SMA, and we're actually seeing an EMA crossover above that 50 SMA, which is a bit bullish. So we can maybe see a pop-up here, and this will most likely move pretty heavily when the futures market open. Obviously, the natural gas, futures will move, which move the UGAZ ETN, right? So watch natural gas. Is it going to go up, which will obviously push up UGAZ on Monday? Is it going to, gap down? These are some things to watch out for, in my opinion. And overall, guys, natural gas, we know the story around it at this point. Production's high, weather has been mild, which is why these prices have been suppressed. So until we start to get some extreme cold, some demand stimulation, this is probably going to stay like this, and a lot of the analysts believe that in the short term at least. So just watch the weather, watch these technicals. We are looking bullish, like I said, so maybe we can rally up to 245, 250, where we can make a nice UGAZ move. But overall, it's still downtrending, guys, so keep that in mind. So if you guys enjoyed the video, feel free to go down below, hit that like button, and consider subscribing if you want to see further content from me. And don't forget, if you want 2 free stocks from Webull, the affiliate link is down below. If you deposit $100, you get 2 free stocks valued up to $1,400. So go take advantage of that, linked down below. I'll catch you all in the next video. Thanks again so much for watching. As always, I appreciate every single one of you all. Peace out.